Welcome back to yet another series of accounting. In this video, we try to understand how revaluation works in the context of core banking. So what exactly is revaluation? As the name suggests, it is the act of revaluing something. So what exactly is revalued here? Number one, these are accounts, customer or internal accounts. The second category is collaterals. So when a customer asks for a loan in a bank, the bank takes collaterals, and these collaterals could be in the form of gold, real estate, or shares. Now, obviously, the value of the collaterals keep changing, and hence it is in the interest of the bank that these collaterals are revalued. So, for example, if a customer pledges for 100 grams of gold valued at 1000 USD, the price of gold fluctuates on a daily basis, and hence the value of the gold held by the bank as a collateral is revalued also on a daily or a periodic basis. And finally, you have the securities and the equities which are invested by the bank. These could be T-bills, bonds, or equities in the stock exchange. So how does the revaluation of accounts? Some key features. It is a process by which the LCY equivalent of the balances in the FCY accounts is marked to market. So obviously, when you're talking about revaluation of accounts, it is understood that these accounts are holding balances in foreign currency. Customer accounts are always revalued as a rule, and internal accounts, specific accounts are revalued, not all accounts are revalued. Let's look at a simple example of how this revaluation works. So on the left-hand side, we have the transaction posting, and on the right-hand side, we will have the GL balance data store. So let's assume you have an asset GL A001, and you have actually posted a debit of 10 USD. Because exchange rate is 50, the LCY equivalent will be 500. So because of this, your GL balance for A001, the debit balance will be 10, and your debit balance LCY should be 500. Now, what happens if the exchange rate drops or increases from 50 to 55? So what happens? The balance of 500 for the 10 USD is no longer 500, but it will become 550, an increase of 55. So what it means is that your previous asset balance, which was in 500 LCY, will increase to the extent of 5. 5 into 10 is 50. So your debit balance increases by 50, which means it's a credit to your income of 50. So how does it translate to? Your translation will happen. The FCY will still remain as 10, whereas your debit balance will not increase by 50. And the other portion, the revaluation, because there is an income, it goes with the rate of 50. So if you look at the revaluation entry, it is passed in USD, but it doesn't have an FCY component. It has got only an LCY component. So what exactly are the features of revaluation? Number one, the revaluation can be done on a daily or a monthly basis. And income and expense generally are not revalued because the local currency equivalent of the foreign currency income or expense is crystallized, which means it is frozen at the time of recognizing the particular income expense itself. And it doesn't vary over time with fluctuations in exchange rates. Contingent assets and liabilities, yes, they may be revalued, but the practice is quite rare. Now that takes us into the concept of revalue into. Now what is revalue into? Now how does a typical revaluation works? You actually debit the asset GL and credit the reval income. Now both of them are real. Now if you have to revalue a contingent asset, the above style will not work because you will have one leg contingent and the other leg real. So what we do is that we identify a revalue into GL, which will be a real type of GL. So for contingent asset revaluation, we debit the revalue into GL and not the actual contingent asset itself, and credit the reval income GL. So this is the concept of revalue into GL. Thanks for being with us. In the next session, we are going to understand what is off balance sheet items. Thank you.